All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on March 5th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly, or you end up living in a van down by the river. All right, let's go ahead and get it rolling. So we're going to start off where we always do. We got a couple of interesting things to look at today as well. Some things we haven't looked at recently, but we'll start off with TNX. So obviously, since we last spoke on Wednesday, we saw the gap up continuation on Thursday and then came back down, closed that gap as well. Still in a very strong uptrend. We're starting to see a little bit of weakness up here. The two main things we're paying attention to is obviously we took out that previous high and we have our cycle high up here. So this is an important level to hold for support. And this is an important resistance or level once we clear it. So we do see the hard sell signal inside of the bullish control zone, but we're still very much inside the bullish control zone. So it's still going to be a while before we exit that area, even if we do get some more momentum to the downside. So we are still a little ways away from the actual exit and the confirmation of the signal. Losing a little bit of momentum. Still looks good overall, though. Nothing here really changes the way I feel in the last couple days worth of price action. The truth is the big area was just clearing that previous resistance. And now the probability of just hitting like a measure move off of a W bottom or like a double W bottom or a WW bottom will pretty much just take us back to the highs. So it seems like that's where we're going. So now let's jump over and take a look at TLT. So we haven't looked at this lately because we just essentially use TNX as a proxy. But TLT 20-year bonds look like absolute trash still. Obviously, the move we predicted played out beautifully off of this massive head and shoulders pattern. We got the breakdown, the measure move. We hit some key fib levels, 786 retracement, came back up, back tested the 618, and now we have basically just been trading in this little M pattern right here, which obviously is very much the opposite of what we're seeing with the W pattern we just looked at on TNX. So this looks like an M, double bottom, and we're holding on to it for now, which is important because that we sort of took out that level here, so it's pretty similar, but we took it out by a lot less. And so if we look at like the 20-year, we see we barely kind of took out that level. If we look at the 10-year, we took it out a little bit more. If we look at the 2-year, we took out the previous cycle low or high equivalent. If you're looking at like the actual 2-year treasuries or the 2-year yield, obviously. So that being said, the short-term risk curve is still pricing a much different situation than like medium, than long. So the market still does not believe that inflation will be persistent, which in my opinion is wrong. I think that we're going into a macro inflationary environment for the next like multiple years, potentially decade. But it's not necessarily a bad thing because typically things boom when there is inflation. I mean, there's two ways it works. The inflation is booming and then we end up having a recession because the Fed, basically puts a quell on the inflation and it slows the economy and then the inflation stops, or central banks fail to get inflation under control or choose not to, and then essentially we get like an economic boom that is fueled by the inflation. So, one obviously is recession, one is persistent inflation. You can pick which one's better or which one's worse, or you can bet on the no landing or the soft landing or the whatever. I'm betting on the it's all BS. So that being said, TLT looks terrible. Now, at the moment, it looks terrible, but on the daily, we're getting a hard buy signal. We just exited the bearish control zone, rather. We're starting to see a couple positive histograms and starting to roll back to the upside. So maybe short term, we're going to bounce off this level and test back to the upside. But essentially, depending on exactly, what am I doing right here? Depending on exactly how you were looking at this, we're basically just trading in between this range right here. So as long as we're essentially topping out around 109.75 and bottoming out around 99, I would just assume that we're going to do the same thing. So if we're at the bottom of the range, more likely than not, we're coming back up to test the 200s and at least the middle or maybe the top of the range again. But again, I am still not seeing this irrational exuberance in the bond market right now. And everybody that gets excited and says, oh, this is amazing, I can get a 4% yield, so I'm going to lock in at this, they're going to basically be on the wrong side of the trade when suddenly, you know, let's say there's a 6% yield available or something like that. And that's going to crash the price of, you know, their bond. Or they just hold it and they lose out on the opportunity of putting that money somewhere else where it's making more. Excuse me. So I can understand how a lot of people are like super optimistic, thinking that like this is an amazing opportunity for bonds and they're buying the dip and all this stuff. But I don't think you want to be buying the dip on a 40-year trend reversal, because you may find that the dip continues to dip. And then next thing you know, it's a crash and you're gone. So Dow Jones. So we talked about the area getting a bounce off the 200 simple. So we back tested the 200 exponential the first time, came down here closer, not quite to the 200 simple. We did take out that low, which is not good, obviously. But a lot of times we'll take it out by a little bit and then push back up, which is exactly what we did. Again, we're still looking at the same thing. As long as we're above the 200s, we're still above support. You know, as long as we're below the previous highs from here, you know, we're basically just trading in this range. Now, the longer we trade in this range, the better, as long as we're above the 200s. Still not potential. I mean, here's the thing, though. We have to pay attention to this. The monthly and quarterly close. No, that's not the one. The monthly close that just happened, we were essentially talking about how we expected that weakness into the close and then strength afterwards, because basically what's happening, there's a bunch of selling pressure to close and print the candle a certain way. And then afterwards, the sellers no longer have to keep that pressure on because they won the battle. They printed the candle. It's locked in. It's there forever. It's drawn on the charts. It's permanent. So then they can let up and do whatever. And now they have another 30 days before they have to worry about closing the next candle a certain way. And the reason they're quote unquote painting the tape or trying to close these candles a certain way is because when you come in, technical analysts look at it, they make decisions based off that price action. So many of you guys have been watching the channel for quite some time. Obviously, all of you guys. So that being said, you know all about the blue squiggles and the importance of that level. And I mean, I couldn't have possibly drawn a more technical pattern than the blue squiggles. I mean, it literally paid out perfectly. You'll see right here that we come down and we touch this squiggle perfectly. We then bounce back up. We top on this squiggle right here as well. Very, very technical levels. And then we come down once more to a slightly lower squiggle. Okay, we actually overshoot it a bit. And then after that, boom, the squiggle support locks in. Okay. And you could say, sure, oh, it was just a 200 simple. Maybe it was a 200 simple, but I'm pretty sure it was the squiggles, guys. So that being said, this squiggle cluster of support right here obviously played out beautifully. We talked about breaking down from the ascending channel, coming down here, touching the descending resistance, and then obviously the squiggle support zone, and then getting the bounce, which is playing out beautifully right now. So the next target to the upside would be the heart line here, now that we've reclaimed the bottom of the channel, or potentially back up to the top. And then you guys know we have the measure move set up all the way to the top. And I know what you're thinking. How can you be both bearish and bullish at the same time? We have to explore both those situations in case we're wrong. That way we can determine, you know, what trade setups are good to take. So in this case, the squiggles played out nicely for now. It's a very important area to hold if we do want to continue or start an official bull market, uptrend, whatever. And if you're going off fundamentals, of course, it seems crazy to go into like a bull market, but I don't know. Could be. There's a lot of reasons. We talked about that. So triple Q is next. Looks okay, bouncing the 382, the 200 simple, all that stuff. It's basically the exact same chart. I mean, all of these are pretty much the same now. The Russell, a little bit stronger, bouncing the 200 exponential, has not come back down and retested the 200 simple. So looking a little bit stronger here. All right, but we always look at that stuff, so you guys already know all that, so we're not going to waste a ton of time with it. So we'll jump over to the DXY next. What's going on, Mateen? What's up with you? And Durwood, what's up? Good to see you guys. Everybody else who is silent in the chat, good to know you guys are out there lurking in the shadows. So DXY is next. So DXY retesting the 200 exponential for now, consolidating at resistance. We know what that means. When we consolidate at resistance, more likely or not, we're chewing through sell orders before the next leg up. So while we are starting to see some weakness, we got a hard sell signal. We exited the bullish control zone. We have multiple red histograms. We're still in a decent little momentum trend for now. And if we weren't at resistance right now, I would say it looks like we're about to roll back over. But it does look like we're chopping through here, getting ready for a push up. And that could mean, if that happens, maybe it just rolls over, lays down, we go to new lows, the dollar goes to zero, and everyone else is right and I'm wrong. That is possible. That is a possibility. Literally the entire rest of the world would be right, and I would be the only one who's wrong. It is possible. Or I'll be the only one right, and everybody else will be wrong, and we'll jump up here to the 200 simple before we see any weakness. So we'll see. We'll see. Probably, I would just probably bet on everybody else. So Tesla is next. Still just consolidating at the resistance here. Again, we're seeing, this is one thing I do like about what we're seeing with Tesla is, we see a bunch of weakness. We're just hanging out here. We see a bunch of weakness. We're just hanging out right here. So this thing's going to be like back down to like low levels soon, to where it's likely to get like a bounce and another push up here. So, you know, what's going on with Tesla right now? We had a massive run to the upside. Everyone hated Tesla the whole way down. It was trash. Nobody wanted it. You know, all of the cult, you know, basically disowned it. And then we bought down here, we sold up here, and now everybody else loves Tesla again. They want it. So is that enough to propel it to new higher prices without us? It's popular. It's popular. It's possible. It is possible. Microsoft. So we had a nice bounce in everything basically in the last couple days, retesting the 200s, bouncing off key levels. Again, you know, this is what we're talking about. We have basically sold off into the end of the month, extreme weakness on everything, momentum coming all the way back down to the downside, and then price action substantially higher than the previous low. So we have a macro low right here. We have another low right here, substantially higher. And when we look at the indicator oscillators, here we have a low, substantially lower low right here. So we're printing bullish divergence. So it makes sense we're going to get some kind of other push up here. And we're seeing that basically across the board. Apple, same thing. Google, maybe not Google. Google's pretty trashy. It's pretty bad. Okay, yeah. So technically Google as well. Yeah. So basically just all the same stuff we said, but just still. Amazon, Meta, all the same stuff, all the same stuff. NVIDIA. This really shortens the streams if we don't have to look at all the stuff because we look at it every day. So NVIDIA, pretty strong right here. Came down to the 382, found support, moved up to 236, broke through that, continuing to the upside. I mean, this is like part of the excitement. I mean, NVIDIA by far has captured every single potential bubble momentum move, like in this entire cycle. They have done a phenomenal job transitioning from one bubble to the next. And at this point in time, they're not far off their all-time high prices. And realistically, I mean, semis do often lead out of the bear market or like into another bull market. And this thing looks like it's well on its way. So maybe semiconductors are telling us something and we need to listen. I don't know why everybody's so convinced there's no way we can go to new all-time highs right now. Like there's definitely weakness. There's some stuff to be worried about, but I just don't think we should like write off one situation or the next. So we're going to take a look at something we haven't looked at in a while right here. Absolutely my favorite investment of all time. Something that I believe in very strongly, not only with my mind, but also my heart and soul. So you guys obviously know that this investment, air quotes, is Silvergate Capital, one of my personal favorites. Now, I know in the past I have said some pretty mean stuff about Michael Saylor and Silvergate and crypto being like basically just a bunch of like scams and trash and garbage. And while I don't want to pull any of that back at all, because I still believe all those things. Oh yeah, I don't even know where I was going with that. Yeah, all that stuff's still true. It's still garbage, still scams. Yeah. And the last setup we did was that short setup right here. Basically from the top, broke down, came down to the bottom of the channel. Complete meltdown, 54% short right there. The second target was actually just a little lower down the range. And that was 69%. And then who would even thought the target that we never thought would happen anytime in the near future for the 91% short has actually over exceeded what we thought. So congratulations. This was the all-time low on Silvergate, and the recent one-day candle drop took out that low. So Silvergate's officially at a new low. And I mean, I don't want to count my chickens too early because I did say that Silvergate was going to go to zero and it was going to be bankrupt and it's complete garbage and it's trash. And, you know, what kind of retards could possibly manage a company and loan out billions of dollars to a cult leader retard from, I mean, let's be real, it's Michael Saylor, who's going to speculate on digital fake assets. No offense, you know, you guys know I like Bitcoin, whatever, but still, no one in their right mind would ever loan someone millions or billions of dollars to buy Bitcoin with, to speculate on digital assets. I mean, you would have to be a retard to make that loan. You would have to be almost as big of a retard to take that loan, but not quite though, because you just figure, oh, if somebody's that stupid, they're going to loan me this money, I'll take it. So obviously Michael Saylor is a complete bum, total useless human being, and way down on his Bitcoin position. But not as bad as Silvergate, which is now officially down 97.94% from the all-time high. So I did say that Silvergate was going to go to zero, which would technically be a 100% down. But you know what? I'm calling it. I'm calling it. We went down 98%. I'm calling it. I was right. It's done. Silvergate's over. I win. So sure, there's a couple more dollars it could go. Maybe it goes down another $5.77 and actually it's zero. But you know what? That's good enough for me. I'm not greedy. It's complete trash. Anybody that is stupid enough to loan people massive amounts of money to buy trash crypto, deserves it. Deserves bankruptcy. So have fun. And I'm sure there was some massively illegal stuff going on because they're under investigation by literally anyone and everyone. I mean, I even saw like a little kid with a magnifying glass, and he was walking down the street asking for directions because he was like, hey, I'm looking for the Silvergate Capital because I'm investing them for being scammy, scum, piece of shit. So even that kid's after him. You know what? And that was just completely random. I was just out and about and it just happened. So obviously that's not a real story. So that being said, Silvergate is complete trash. It went to zero. And as far as I'm concerned, we're striking it forever from the records. And we'll just chalk that one up as a big W because Silvergate's garbage. And another crypto implosion. The next one in a line of many. So I perfectly called the Celsius implosion within a couple of months. Perfectly called the FTX implosion within a couple of months. And Sam Bankman-Fried being the biggest sloth scammer piece of trash ever. With the exception of, well, maybe not ever, but pretty close. Dollar-wise, probably. And then on top of that, Michael Saylor. And, the complete meltdown of Michael's strategy. And now Silvergate as well. So, I mean, just what's the next domino going to be? Who knows? I mean, we'll probably pick it out roughly 2 months in advance. So keep your eye out for the next silver project or crypto project to go to zero. So, yeah, lucky guess. Lucky guess on that one. Really? A bank that loans people money to speculate on digital assets went bankrupt? That's weird. Oh, really? Oh. So Bitcoin is next. So we talked about this on Wednesday, and exactly what we said happened. We were very close to confirming the 821 bear cross on the daily, and that is exactly what happened. So we came back down to the 200 exponential. We talked about specifically why you don't want to have your stop loss up here because you could likely get wicked out if we do retest the 200 exponential, and then the trade could potentially go in your favor. So we talked about a scenario where instead of that, you just added a second position off of the pullback. So we basically came down to that entry level within a couple of pennies. I'm not sure that we don't get there, so I don't think I'm like FOMOing trying to run after this, like, oh no, I'm going to miss out. Yeah, I mean, that was a perfect example of what could happen turning into what did happen. Now, from here, I see two potential, like pretty clear routes for crypto. We basically find support at 200 exponential, come back up here and retest that previous level right there, and then come back down. And essentially, you know what? I have like just a random tool I grabbed, and yeah. Dear God. There we go. So that would be a bounce back up here, basically, and essentially be that right shoulder. So now we have that left shoulder, that head, and then here we are at the neckline. That's our right shoulder. And then potentially a breakdown from there down to the 200 simple. And then obviously we have to be careful. If we close below that, we do not want to be in that trade anymore because we're likely going lower, but we don't want to get stopped out by some random weight. After that, maybe come back up, retest the breakdown level, and then potentially come back down here to put in a higher low. And that's all that really matters. All we care about is putting in a higher low than this right here. So if we just draw a, daily support line, something along that lines, roughly, we can find essentially like an ascending support that we would want to hold. So ideally, this 5 would come back down here, retest it again, find support, and then after that, it's off to the races. And then this would later turn into, sort of like a macro structure starting to form where we basically just do, something like this. And then the bull run's on, we're going to the moon, everything's great, potentially. But I mean, let's not write off crypto imploding completely just yet. We do have that bearish divergence. It is playing out. It does seem more likely than not that we're going to test the lows before we start breaking out to new highs, in my opinion. But we are currently at support at that 200 exponential. So I think a small move back up to like 23, potentially even 24K doesn't sound crazy. But as long as we have the 821 bear cross right here and we're basically just trying to decide on the trend, I don't want to be like super committed one direction or the other. Okay, so we got the Bitcoin futures chart. We talked about this quite a bit. It's important because there's a divergence between the Bitcoin spot market and Bitcoin futures market. So where currently we're holding the 200 exponential on the Bitcoin spot market, we have broken down from that level, acted as resistance, rejected us. And now we're coming down to the Bitcoin simple moving average of 200 on the futures chart, which is like 21K, as we're like on the spot market, it's closer to like 20K. So it seems like, obviously, with this gap right here at like 19,700, it seems more likely than not that we're going to head down here first to 21K, and then we're going to head down here and close that gap. And then we'll see. Maybe that holds, and that's our higher low, and we continue on from there. Maybe that breaks. We come down here, we take out the low, and crypto goes to zero. Maybe. ETH still looks exactly like the Bitcoin chart. Literally no difference. No reason to even look at this chart. Total market cap, again, looks exactly like Bitcoin on the weekly. We backtested the 200s on the daily. It looks exactly like Bitcoin. There is some positive momentum. We are in the bullish control zone. We're at resistance, though. Consolidating here for a while. Maybe we break out to upside. If we get rejected right here, again, retest the lows. So that's what we have to look out for. What's up, Hex Evolve? Good to see you. Time to buy the dip on Silvergate. I mean, look, if you're going to buy the dip on something, I mean, when it's down 98% or whatever, it seems like a pretty good chance to buy. I mean, just assume that it's going to go straight to zero. I mean, but if it doesn't, there's all kinds of upside potential. All kinds. When it's already down 99%. I mean, if it goes back to its all-time highs, I mean, just think, dude. You'll be loaded. All right, so Bitcoin dominance on the weekly. So this is everything. Still bullish above the 821, trying to move back up here. Still trading within the range. Support is obviously in green. Resistance is obviously in orange. We are like pretty much right smack in the middle right now. Momentum still in the bulls' favor. It is in the bullish control zone. We are seeing some temporary signs of weakness on the weekly. So maybe it's getting ready to top out and roll over. If we look at Bitcoin dominance without the stable coins involved, we see much more of an uptrend right here. We don't have the 200s, but they would be above our heads. 821 is still bullish, still holding the ascending support. We are starting to lose momentum on the TDMACD, though. It has flipped red, bunch of red histograms, hard sell, left the bullish control zone. It's really up to the bulls right now to keep Bitcoin strong relative to altcoins. And we know, historically speaking, a breakdown from this level likely corresponds with an altcoin rally as people flee Bitcoin and go into altcoins. So yeah, if this breaks down, probably just going to be buying like the trashiest altcoins that I've never heard of. BNB on the daily, Binance coin. So this had that initial sell-off, got bought up pretty aggressively, decent little rejection wick of lower prices, but we are now at the 200 simple. So we lost the 200 exponential at flip red again. We're basically at the 200 simple, and it's red as well. We have red slope line on the TDMACD, all red histograms below the zero line, hard sell, Stokes powerfully angled to the downside, about to enter into the bearish control zone. And you guys know that nobody really cares about BNB, let's be real. Matter of fact, no one even likes Binance or CZ. But that being said, they are very important in the space right now, as Binance is now the largest exchange and also, you know, part of the whole Ponzi scheme. So we'll see how this all plays out, but very, very important levels for Binance to hold at like 260, the ascending support line, or potentially even 229. And you may notice that I'm on Binance US, and obviously there are some liquidity issues on this exchange, as we see like massive, insane wicks that we don't see on other exchanges. So I'd be very careful on this trash exchange. That being said, it is awfully convenient that we literally have these 2 points right here on the ascending channel, and then it literally wicked down and touched that point to a T. So, I mean, no surprise right here. This, to me, looks like they're just clearing out the books, just taking everybody's money. So be careful with any standing orders on Binance US in particular. Also be careful, as if we lose this level, we're basically confirming back into a bear market. And then we have a couple levels before essentially retesting the lows. And then, of course, we have the giant air pocket that takes Binance down to $40 for, roughly like Silvergate type gains. And by gains, I mean losses. So get ready. Matic on the daily, still above the 200 exponential and simple. So we have seen some weakness lately, but this thing is so much stronger than the rest of the crypto market. It's like the only thing that still looks actually good. So I don't know what the hell they're doing behind the scenes at Polygon, or if people just like the name or something like that, or if, I mean, honestly, I don't know. But you know what? We're going to keep trading it because it literally outperforms everything. And then we have BAT, Basic Attention Token, one of the dirtiest dogs ever. This thing's just melting down back below the 200 exponential and simple. The weakness that we're seeing right now in most of these trash altcoins tells me that, honestly, the probability of a bullish break in the crypto market is very unlikely. Very unlikely. Unless they just suddenly like all reclaim their 200s and start outperforming Bitcoin, and then we go into like our next, crypto bull market. I just don't see a scenario where the altcoins are gaining market cap without us going into like a bull market. So if we see sudden strength in altcoins consistently regaining the 200s, consolidating above those levels, flipping them blue, Bitcoin dominance starting to fade, I'm not going to fight it. Okay. I'll just assume that the market is pricing in, more central bank easing or whatever the hell else. And honestly, I don't really care what it is, as long as we can trade it and make them gains. All right, so we got a bunch of randos on here, some important stuff, some just random leftovers. So let's take a look at those as well. So we have gold, XAU, bouncing the 200 exponential perfectly. Did front run our target of the 0.5, the heart line of the channel, and the 200 simple just a little bit. So of course, we like to see our perfect touches, but maybe we're coming up here, roll back over, and then we'll get our nut. I think more likely than not, we're headed back down to that level. Hard buy signal, exiting the bearish control zone rather. Bunch of green histograms. Actually looks decent right here. But likely these little push up right here was corresponding to that weakness in the dollar. So in the end, it's the same exact thing. Like for every chart, just watch a dollar and you'll see where everything else is going. Silver, much weaker. I mean, it's no silver gate. It didn't go to zero, but it's still trash. It's still trash. The difference is if you invested in this, actual silver, you like have some piece of metal or whatever that you could like, stop an intruder with, or prop your door open, play catch in the yard with your friends. If you invested in silver date, you literally have nothing because it went to zero and it's garbage. So congratulations. Also, multiple green histograms on this. It is trying to push up and find some support here. So looks like silver wants to push up to like 22 bucks before it goes to zero, before it goes the way of the silver gate. I mean, let's be real, guys. It's not a coincidence that Silvergate has the word silver in it, because it's a dirty dog and it's going to zero. So careful about that actual silver, because it might be going to zero too. Okay. I heard they don't even use it for anything on earth at all. Matter of fact, silver's price going so low, they're going to stop making like aluminum cans and they're just going to start making them out of silver because it's just not worth anything. So Caterpillar is next. So we got a couple of these ones I want to watch right here because I think something that is gone sort of like, here's the thing. When we used to talk about like billions and hundreds of billions, it was like a big deal. And then we got into like, the like trillions markets, and now it's like a trillion, 10 trillion, 30 trillion in debt. And now like trillions a big deal, billion, 10 billion, 100 billion. It's like whatever. It's chump change. Okay. Like I don't even get out of bed for $1 billion anymore. Like the world has changed. Okay. So that being said, when the trash U.S. government, when the really good U.S. government that definitely has the prosperity of future posterity in mind and, quality of life for its citizens, etc. When they make decisions, okay, we have to trust that those are good decisions and that they're not just like, going to waste billions of dollars buying stuff at record high prices and just wasting money on government projects that never actually get anything done. So that being said, they're like passing like 10 billion, 100 billion packages and everything for like infrastructure and all kinds of like trash that they're going to waste money on. But I mean, nobody's talking about it anymore because it's just like 10 billion here, 20 billion there. Like, who cares? It's not even $1 trillion. So it's not even to move markets. But that's real money that goes into the economy via, deficit spending by the Treasury. So that being said, that money's going to go somewhere. And if it's going to build stuff and make stuff, and we need heavy equipment and we need, the materials, whatever, I don't think it's crazy to think that we actually see like strength in these things. So here we see Caterpillar taking out the highs, and essentially it broke that new all-time high, broke back down, and now it's close to like retesting the highs again. We're above the 200 exponential. It's above the 200 simple. I mean, this thing could have had, should have had, would have had the pullback right here, and instead it went higher. We got one more dip down here. This thing looks ready to rip. I mean, it looks ready to rip. So, I mean, blue sky breakout, basically, in the last couple weeks right here. Nice little pullback. There's a strong fundamental case for why you might want to invest in caterpillars. Not butterflies, okay? It has to be caterpillars, okay? Because you have to give them a chance to cocoon up and then bloom into something glorious. All right, so if you like fuzzy worms, might not be a bad investment for you. Next, we have deer, okay? So if you're into venison, might be good. If you enjoyed the movie Bambi, perhaps this is the investment for you. So John Deere, the old Deere and Company, tractors and stuff. Again, very, very strong here. We hit the high right here. We basically tested that high multiple times. Banged our head on that, consolidated, had a little pullback. I was looking for something closer to the 382. We got somewhere in between the 236 and the 382 in white right here. And you know what? The market like basically V-bottomed out of there, higher low, continued, broke down from that level, back testing it, trying to see the continuation of the upside. Very, very close. So this trade setup likely takes us up to the 1.236 Fibonacci extension, or the 1.5 is my next target, or obviously the 1.618. So that's like $600 if we go to the 1.618. Probably don't. Probably just go straight to zero. But 500 seems like the initial first target, which is like roughly, it's like 17% from where we're at right now or something. 16%, 15.49. I don't want to exaggerate, but who knows? Might be worth a shot. I don't know. There's just so much trash right now. Everybody's like super excited to buy like the trashiest stuff that's like complete trash, just like bleeding hundreds of billions of dollars left and right, never making profits, no even like, route to profitability. And then it's like, oh, look at this company that makes the real stuff that the government's about to spend tens and hundreds of billions, probably trillions of dollars on. And by spend, I mean waste. Maybe those companies could be a good investment. Maybe. Okay, so we looked at some big names here, some of those important stronger Roonies. I want to look at UNH, United Health Group Incorporated, because a lot of the people, a lot of the, I guess like, safety trade, kind of recession fear trade is healthcare. So this is like the number one by weight market cap Dow stock right here. So it's a big deal. It's kind of a big deal. And it's confirmed into the bear market and testing the lows. And obviously the whole idea was, we're going to go into utilities. We're going to go into healthcare. We're going to go into real estate. We're going to go into, consumer staples, like all these like super safe recession stocks. And you know what? Honestly, if you look at these charts now and you look at the price action and everything, the market is no longer pricing in a recession. Okay. We got the soft landing, or the smooth sailing, or the no landing, or the, over the pants hand job, like whatever the new, like story is for why everything's fine and everything's just going to go to new all-time highs. We got it. Okay. We got it. We did it. We got the rabbit for a rub, or whatever you want to call it. So there's no reason for safety. Therefore, these safety sectors now, basically just look like dogs. And I would just immediately expect all of them to go to zero. Probably tomorrow. Maybe, by Wednesday. By Wednesday at zero. So kiss the, $500 billion market cap goodbye, UNH. So we hit the 786. We bounced it pretty nicely. We're doubling right here. We're in a clear bear market. If we break to the downside, we have the 886. I don't count that for basically anything. So it seems like we're going to retest the lows at 450. Potentially we could retest the 200s. We still haven't made it up there. So even a back test of the 382 and the 200 simple would be like 513. So we're basically right smack in the middle of the range. So if we do come back up here to 382, I'm probably looking at like short into that. If we come down here to the potentially double bottom at that low from June of 2022, I would be potentially looking to long that for the reversion of the mean back test. But we'll have to kind of see how it plays out. We are above the slope line. It is red. We have all red histograms. Not crazy to think that this rolls over, comes down, bounces the slope line, and then we start to move back up. So that's what I'm looking at, but it does look like it still has some more downside for now. The real target that we would love to see get hit would, if we go all the way back from March of 2020, the lows at 187, and then we look at the macro highs recently at like 560. Insane run right here. Insane run. Not crazy to think we come down to the 236 in orange and retest 431. Especially if we get down to that one previous swing right here. From there, then we likely get the reversion of the mean and then potentially even go lower to the 382. So, this is definitely telling us that people are no longer scared. Nobody wants safety stocks. They want the trashiest trash that ever trashed. And that usually means it's the top. So GSG, aka the GSCI Commodity Index Trust ETF, / iShares. We tested the bottom a bunch of times. We're pushing back up here again. We're below 200 exponential and simple. It's not crazy to think that we could retest the 200 simple, but we got quite a bit of resistance in this channel we traded in, and we haven't been able to get above it yet. So maybe it's just going to take time for the 200 simple to roll down to us, and then we test it around this level. But more likely than not, I think, we'll see what happens here in the next few days. Maybe we do get that push up here. That actually start looking decent. But as long as we're below 200 exponential and simple, more likely than not, we're coming back down to 20 bucks. Eventually, we're going to hit 20 enough times. We break down to 18. And, obviously that's the level we've been looking for. And it is important to pay attention. We talked about the industrials, John Deere and Caterpillar. We talked about all kinds of other random things. But realistically, we need the actual potentially like material sector could do well. There's a lot of ways to trade the same stocks, or like ETFs have a lot of the same stuff. So, looking at like the big players inside of some of these ETFs or whatever, give you a good idea what you're involved in. And if you don't like some of the stuff in it or whatever, potentially look for like an X out type fund or something like that, or potentially just invest in some of the bigger names, but not the entire fund. But I think some, theoretically, like commodities, materials, stuff like that would do well also if the government's going to be spending hundreds of billions or even trillions of dollars. And it's not like we're the only government doing it. It's like China, Canada, all kinds of countries all over Europe. Lots and lots of people are doing this. I mean, look at Europe. They basically just paid record prices, ridiculously high prices for liquefied natural gas because they were afraid everyone was going to freeze to death and die. So they literally bought everything at like all-time highs, filled up everything, and now the prices are like crashing. So just think about, if you think your government's smart or intelligent or makes good decisions and you live in Europe, just think about how much taxpayer money or fake central bank digital printed money the government just wasted because they're dumb as shit. And I mean, really, really dumb. So that being said, LNG, we talked about this one. Trade setup played out pretty nicely. Jumped up here like 15%, back testing the 236 and the 618. We'll see what happens here. If we get back above this level, I mean, it's probably going back to the highs. Shell at the highs, I mean, just destroying, just complete destruction of anything. A long-term cycle breakout right here. So, I mean, sure, it could roll over and break back down, and it's just an epic failed breakout, or, false breakout, or throw over, whatever. It's possible. But I mean, breaking through this descending trend line is very important, and taking out that previous high from a few months ago, very important. So it seems more likely than not that we're headed back up here to retest this one, which, I mean, we're talking about like an 18% move, a 3% dividend, a company that's probably going to be making decent money going forth. Put it that way. So Mosaic had a nice move. So we double tested the lows, took out the low slightly, looked like we are going to go lower, back tested 200 exponential and simple, consolidated, broke back above them. But what we need to look out for is, here's our high, here's our macro low down here. And then the initial bounce was back to the 618. Then we came back down to the lows again. And now we're at the 0.5. So we have a high, a lower high, a lower high again. If we get up here, take out the 618, then we can start looking at 786, new highs, and continuation of the upside. Makes sense. Makes sense. So this is a clear line in the sand for us, as is the 618 for that lower high. If not, this thing probably soars. Pot stocks on their way to zero, trying to find some support, bullish divergence for the 26,000th time. Probably do see some kind of trade setup play out here. I mean, this is exactly what here's the thing. If I was trying to like squeeze people out of their positions, this is exactly what I would do. Push the price down to a new low and then let up. That corresponds with a higher low right here, a blue slope line. If we're in the bearish control zone, the Stochs are about to cross up. The knife is already above both the Stochs. So, I mean, are we just going to get a better entry from a lower price? Probably. I mean, I don't like keep put these like random pot stock trade setups up here because I don't know if you guys are doing as well with them as I am. I mean, we've obviously had some phenomenal scalp trades on some of these pot stocks, but you know, if you missed out on some of the good ones and you're just getting chewed up by the bad ones, stop playing the game. Stop playing the game. The only reason we're playing it is because we're just up so massively from all of these random scalps on the way down. But I mean, this is trash. We're trading against a trend in something that literally just goes closer and closer to zero every day. Now it's consistent. It's not just going to zero like Silvergate overnight in a single day down 66%. But I mean, it might as well be. These things can't even exist that much longer. URA, Uranium X Global ETF Fund, ARCA stuff. All the uranium charts basically look the same right now, or like very close to it. They're all just kind of fighting to stay above or at or near the 200 exponential and simple. We sold off pretty heavily from the bullish control zone to the bearish control zone. Trying to bounce this level now. Looks like these uranium stocks are going to push up. Just think about all the people that were like hardcore uranium cultists. Since November of 2021 until today, all we've done is just go down. Consolidate, whatever. So, I mean, this has been pure dead money, even if you don't count the fact that you're actually like down off the highs by like 31%. But this is why, like, you know, we get excited back here as the 200 exponential and simple crosses. This is the back test. Could have easily failed and went lower right here. It held. We've been bullish the whole way up. We got bearish through here when the 200 simple crossed above. Then we put in the lower high. And then after that, it was just a brap. That's a wrap. Took profits mostly in, you know, this area up here. So if we do consolidate here long enough, I'm looking to re-enter. It'll still be a lower price, not as low as if we would have just loaded back up at like 18 bucks. But I'm also not going to like front run this thing right now because we could have much lower prices on this. And you know what? I mean, a lot of times when people spend a bunch of time in something and it goes sideways or down, they just want to get out and get somewhere else. Because even if like most stuff is doing the same thing, they're always going to see like the bright, shiny thing that's outperforming. So speaking of the opposite of bright, shiny thing that's outperforming, let's talk about China and NEO. So we did a little breakdown on NEO, talked about it specifically, talked about some trade setups and stuff. People were offering it if it was like opportunity to buy or whatever. And I made a bold prediction, okay? And that was after I was completely wrong about LNG, all right? I made a bold prediction, okay? I pulled an Amazon on this one. And if you don't know what I'm talking about, you're about to find out. So we got those quarterly numbers. And I did estimate that we're going to see record net income. And by record, I mean negative net income record. And that's exactly what happened. Negative 604 was last quarter, Q3 2022. And I predicted that we would absolutely smoke that. And by smoke it, I mean to be substantially more negative. And we are. Another 224,000. So, I'm sorry, million. So just like another $250 million negative. So when we add it all up, we do the math. Daddy was right. So the revenue for 2022 was $7.32 billion, and we smoked it. Ladies and gentlemen, congratulations. NEO managed in a single year to lose $2.16 billion. So congratulations, NEO. Complete trash company doing complete trash things. Just literally just lighting money on fire. I mean, it's absolutely amazing. Phenomenal. So I predicted that obviously net income 1.64 billion last year, that we just absolutely smoke that. And we did. We crushed it. Negative 2.1 billion. So if you're interested in investing in something that literally just takes your money and immediately lights it on fire directly in front of your face, this is the investment for you. I'm not saying it's the best investment you could ever have if you're looking to literally just light your hard-earned money on fire, but it's close. It is close. So congratulations to anyone that has lit their money on fire with NIO. And obviously we predicted an $8 price target. We made it right there. It was beautiful. $8.34. Congratulations. We retest that level again. So if you are bullish on this and you just think I'm dumb and they're just going to stop bleeding money and that was just a fluke, that all they do is lose billions of dollars for, well, ever, their whole life with no signs of making money in the future. And that when they like capitulated down here and the Chinese government basically had to come in and essentially bail them out and put them on this massive run to the upside, not crazy to think that if they're losing record amounts of money, they're just going to head right back down here. So, you know what? What's the next target? $4.46 if we break down from here. After that, you know what, a dollar or something like that. So is NIO a good investment? Yeah. Yeah. I mean, here's the thing. Okay. If you want to like store your money somewhere safe, you can do it in a bank. If you want to store your money somewhere else that's not a bank and you're not worried about ever getting that money back, I mean, why not have NIO store it for you and just light it on fire? Just burn it to the ground. So yeah, I mean, probably does have a nice scalp move up here somewhere, but I mean, Jesus. But is it going to Silvergate drop like 50%? I mean, it's 57% up, 50% down. It's a coin toss. And they lose billions of dollars every year. So I got to say my favorites to the downside. Alibaba's next. So again, pretty well beat down, just absolutely capitulated and just getting crushed, you know, just demonstrating China's just amazing power and strength. And then we break above the 200 exponential and simple. Everybody FOMOs in. These are amazing. China's great now. The reopening trade, the great reopening, blah, 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 blah. Up 100% off the lows. Immediately just gives back half that. It's at support at the 236 for now. It's below 200 exponential and simple. And they're either borderline or already have flipped bearish. So just be very, very careful of the whole like China excitement trade. Now, that being said, we're definitely setting up for a potential inverted head and shoulders target right here. You know, and we're at the entry. The entry would be run now. And the upside target would be 39%, just back to the neckline with 13% stop loss gives us a 2.89 to 1 risk reward ratio, roughly 3 to 1. Minimum we would take for a downtrend, which technically we are kind of neutral right now. I mean, we're below the 200s, but one's blue and one's red. So maybe there's still some life left in this thing. And maybe I'm wrong. And China's amazing and the reopening story and everybody else is right. And it's just going to boom and it's off to the races. And who cares about the property market? Who cares that they're doing QE while the rest of the world's doing QT? Who cares that they're devaluing their money faster than literally anyone on earth? Who cares that they literally lie about everything and don't disclose any real facts? And I'm not talking about Chinese people. I'm talking about the Chinese Communist Party, obviously. So that being said, looks like it's ready for a bounce back to the upside. But I would be very, very careful with the narrative and this thing having played out. Now, the difference being, we went up 100%. We gave back half of it. So buying here was obviously a terrible idea in hindsight, or, I mean, if you just use your brain. Buying now, it's not actually that bad, but I just wouldn't buy this thing like ready to hodl. I would be like buying it like for a trade. And if we threaten the lows, that's 31%. So you cannot ride this thing back down. The last thing you want to do is just dollar cost average hodl if this keeps going lower. But I mean, indicator oscillator wise, the nice spec on top, that's step one. The 8 and 21 are about to get a bull cross. That's step two. We're still pretty deep in here at like 9, but if we get up to 20, that's where we get the hard buy, the exit of the bearish control zone, and then potentially see that continuation move. All in the backs of our minimum indicator, 2 green histograms. So maybe it's a little early. You would be buying into resistance off of support. But there's something there with a trade setup like this. So, but I just wouldn't get greedy with these things. I would be ready to take profits at or around the neckline and just assume it's going to fail, roll over. Same thing here. I would just assume that right after you buy, it's going to immediately drop down. You're going to immediately exit the trade, and then it's going to go straight to zero after that. Yeah, okay, so that's it. That's all we're looking at today. I've got a couple static videos planned out that we're going to talk about some stuff. I don't even know if you guys will be interested in it. Some like super speculative plays for like trash companies that do massive gains. So we'll see. I'll see how popular the videos are when I put them out. All right. How do we do on time wise? Oh, this is beautiful. 49 minutes. So we make it under an hour. That is absolutely beautiful, guys. I'm trying to shorten these up a little bit too. Hopefully it'll be like a little more appealing. But yeah, that's it for today. So yeah, I guess we'll just wrap it up there. Not too much going on in the chat. You guys are awfully quiet today. Did you have a rough weekend? Who else blew out their gambling account over the weekend with a massive parlay? Made it all the way to the second to last fight, and then Valentino Shevchenko got choked out, and we lost it all. So we didn't even get to bask in the glory of John Jones absolutely destroying Cyril Gane as expected. So we were so close. We had the victory literally in our clutches. And yet, at the end of the night, we were faced with defeat. But obviously, I just used like stupid money for gambling. And I do that instead of gambling on the markets. So, don't take that by the risk reward and all that good stuff. I mean, the truth is, the risk reward on that parlay was looking pretty nice right up until it wasn't. So I don't know if everybody else even knows what I'm talking about, but UFC fights, oh man, was it a doozy of a card. I'm sure you can tell by my voice. So go ahead and wrap it up there. Appreciate everybody tuning in today. It is February 5th, 2023 at 8:54 p.m. Eastern Standard Time. And as always, went all in on XRP. I feel like I went all in on XRP and it went to zero. That's what I feel like with my parlay. That's exactly what it feels like. Only the difference is, at least my hands are like clean at the end of it. I'm not holding a bunch of XRP, feeling guilty. But yeah, that being said, obviously, as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Going to be a big week, lots of excitement. Definitely looking forward to it. I'll catch you guys on Wednesday. See the group members every single minute of every single day between now and then, except for when I'm sleeping or doing other stuff. Oh, wait, what'd you say? My bad. Mello went all in on XRP. Not XRP. Anything but XRP. All right, yeah, all right. I'm out of here. So appreciate you guys tuning in today. Everybody have a great night. And